So if you are both employed, and that is whether it's by your own company or somewhere else, and you file a self-assessment tax return, then you have two options when it comes to paying that tax from your tax return. And that is through PAYE, so through employment, or making your lump sum payments in January and in July. So basically, you tick a box when you file the tax return, or your accountant will tick the box when they file your tax return to let HMRC know which option you'll be choosing. But which option is right for you? Now, here are the things you'll want to consider. Firstly, remembering to make the payment. If you opt to have the tax deducted from your wages, then you are not the one who needs to remember to make the payments. So that is one thing off of your mind. The next thing is making the most of your money. So as soon as you opt to pay through PAYE, the deductions will begin to be taken, even though the tax might not be due for some months until January. If instead you do have that tax money set aside, it could be sitting in a savings account, it could be earning interest, you could be getting other benefits out of it until it is due. That's PAYE 1, lump sum 1. The next thing is quick ticking. Now, with PAYE, your tax could be collected over the next 12 months. Whereas if you're a person who likes a quick tick and a quick win, then paying in a lump sum, you know you are done. So that might be for you. The next one is, it feels nicer to not have the money come into your bank ever than it does to see your balance go down. So you've got a big lump sum payment to make, that's going to make a big dent in your bank account. However, if it's just being deducted off of your wages, then that tax money is never even going to hit your bank. And you can't miss what you never had, right? The next thing to consider, though, is how much of those wages that come in through PAYE do you need for your living costs? Now, if your wages are essential to pay your cost of living, then having less of it coming in each month might cause an impact and actually be quite stressful. And if you are on a fairly low salary as well, think about the proportion of what's being deducted is likely to be even higher, and you will feel the difference even more. So that brings us up to PAYE 2, lump sum 3. Do you like talking to HMRC? No? Surprising, isn't it? Well, if that's not your thing, then when it comes to making adjustments or tax code changes, anything like that, PAYE could be the way. If something happens that changes the amount of tax you owe or changes your tax-free allowance, it will automatically be accounted for through payroll. However, if you are lump summing it, then it could be lengthy waiting times, talking with someone on HMRC to get that adjustment sorted. Are HMRC understanding if you underpay? No, not really. So even if completely innocently you underpay, they're not likely to want to hear about it, and you could be getting hit with fines. Paying through PAYE means they are in control of getting that tax, and you are not going to be therefore running this risk. That brings us to PAYE 4, lump sum 3. Do you owe quite a lot? How much are you actually getting through PAYE? Is it going to cover the tax that you actually owe? So, for example, if you're a director of your own company and you're on quite a low salary, you might not even be earning enough through salary to pay that tax bill. Or if you are self-employed and you just work a very little amount whilst you're working on your own business, that could be a similar situation. So if that is you and you do choose to pay through PAYE, you need to be sure that your employment income will actually cover the bill, because if not, you'll still need to make a balancing payment. And finally, are you employed and going to be staying employed? Now, side hustlers, this one is probably for you. Is this your year that you are making the leap into running your own business full time? If there's a chance that you will leave your employment to work only for yourself full time, you may not make the full amount of payments before leaving, and then it will be your responsibility to make up the difference. And again, is this just going to be an unnecessary hassle and something else on your already pretty full plate? That brings our total to PAYE 4, lump sum 5. Now, although lump sum is slightly winning based on what we've discussed, all of these things might not apply to you. There might only be certain circumstances that are relevant to you. So take the time to think about it and make the best choice for you. Of course, if you have an accountant, talk it over with them and they should be able to help you to do so. Now, of course, if you need your tax return doing, then we can do that for you and help you advise how to make payments. Or if you are brand new to self-employment and wanting to have confidence in tax and other things with your business, then why not try our brand new membership, Pink Pig in My Pocket?